Choosing the right mortgage to suit your lifestyle can be a daunting task. Variable rates, fixed rates, down payments, amortization, the world of mortgages can be quite confusing. So how do you know you're getting the right one for you? Joining us today is Sam McDadi from RE/MAX to help clarify the confusion surrounding mortgages. You're watching Daily Web TV. Does the term mortgage get your head spinning and your eyes glazed over? Well, if it does, stay with me today because I'm speaking to top real estate agent Sam McDadi to provide some clarification on the matter. Sam, thanks for joining us today to talk about mortgages. Now, mortgages are basically borrowing money to purchase a home, right?
That's correct.
So let's talk about them. Are there different kinds, and how do rates affect what you choose?
I think the confusion today lies in the fact that there's so many different options for a potential borrower. So I think we need to simplify it. For example, when you're buying a house and you're looking at getting a mortgage, you have an option of getting a fixed mortgage, which means your payments are fixed for the duration of the mortgage, or you can potentially get a variable rate mortgage where the rates fluctuate with prime rate. The advantage of taking a variable is typically rates are lower, so you get a lower monthly payment, but the disadvantage is that that could fluctuate and it's not stable. So it depends at what the person's risk aversion. So if you don't like risk, oftentimes we recommend taking a fixed term position. If you can deal with some risk, then a variable might be a good way to go. That mortgage also gives you an opportunity to lock in at any point into a longer term fixed position.
Okay, hold on now. So you're saying risk. Like if I'm a conservative type of person and you're saying if I want to know that for the next 20 years I'm paying just exactly this amount of money, then I go for a fixed mortgage.
It wouldn't be 20 years, but that's correct. You would take a 5-year fixed mortgage, so which means you're guaranteed the same payment for the 5-year duration. Afterwards, you'd have to renegotiate at the prevailing rates at that point in time.
Oh, okay. So you're really only locked in for 5 years, and then you can change things a little bit.
That's right. Standard's 5. You can actually get 7 or 10 years, but you're paying a higher premium. So most people, by and large, will take 5 years, and at that point, decide what they want to do.
Now, is it better to be conservative or to be a risk taker?
It really depends. If you have a fixed income and you're really kind of cutting it tight, then being maybe conservative is the better approach, where if you know your income stream is going to improve over the next few years and you don't mind taking a little risk, and if the payments will go up over the few years ahead, then you can absorb it, then it's okay as well. It's really a case-by-case situation.
Okay, so it's very individualized.
Very individual.
Now, is it important to pre-qualify for a mortgage when you're searching or house hunting?
I think it's essential. Oftentimes, a realtor might just take somebody in the car and show them a few houses without doing the pre-qualification. And really, there's two things to think about. One is not only the bank qualifying you, but also ensuring that you're comfortable with the payments. So at the end of the day, you don't want to buy a house and feel you can't afford to do anything, your lifestyle's been altered. So we make sure at Team McDadi that everybody really knows what they're up against, and there's no surprises after they buy a house and their payments are as they expect.
How do you do that?
It's really not that difficult. We just really do a cash flow analysis based on their income, their expenses. We evaluate, A, what the bank will first qualify for them, what the bank will first qualify the clients for, and B, if that's something they're comfortable spending. So it's really not overly difficult, but many times people ignore that important or vital step.
So Sam, do you refer your clients to a bank for their mortgage or to a mortgage broker?
One of the strengths people have in dealing with our group is that we have incredible financing contacts. We have financing available that's not really available in the marketplace in terms of interest rates. So probably 95% of the people end up doing the mortgage through us just because of those very reasons.
So you actually have that all in place yourself. We don't need to go outside of it.
You absolutely don't. What we recognized early was that we needed to make sure we had a strong handle on financing, because in many cases people may be marginal, they may not qualify, so you want to make sure if they can afford a house but they might have had a glitch on their credit report, for example, we can get them approved. If they're maybe just shy of down payment, we can work with that. So we've really developed that niche so that we're pretty much a one-stop shop when it comes to financing.
Sam, thank you so much for some great information on one of the biggest things about buying a home, the mortgage. Now, if someone would like to come to the McDadi team to purchase a home, how can they get you?
Very simply, McDadi.com.
McDadi.com, simple and easy. And making mortgages simple and easy for you as well is the McDadi team. Keeping you informed, I'm Sheila Clark, and you've been watching Daily Web TV.